I think it's finally time to officially review SCHD. I've talked about this dividend ETF in a ton of my previous videos. I always call it the best in class. I use it as a benchmark, but I've never actually taken a deep dive into it to see its mechanics and why it's the best. So that's what I plan on doing in this video, as well as comparing it against its competition, namely VYM. But before we get into that, I just made a Patreon for this channel, so if you want to both support the channel and get exclusive video content, the link is down below. I'm going to be making a couple of these exclusive episodes per month, and what they are is just in-depth updates and my thought process on my investment journey, what I'm investing in, my thought process behind it, upcoming changes I might be doing. So that's the kind of stuff in these Patreon exclusives, and the reason why I don't put it on YouTube is because a lot of people don't care about what I'm personally doing. But if you do and you want to support the channel as well, this is how you can do it, link down below. Okay, SCHD. This is the best performing, best in class equity dividend ETF. We see in the past 12 months, it's gone up 43%, which, by the way, I think the average for the S&P 500 per year is like 12%. So this ETF has been on a tear lately. It has low expenses, a great dividend yield, and it's super popular. $26 billion in assets under management. In fact, we can come over to the dividend ETF list and filter by total assets. They have VTI here for some unknown reason, and then it's VIG, VYM, and then SCHD is right here, one of the most popular dividend ETFs. As mentioned, I want to compare SCHD versus VYM for a couple of reasons. So first of all, they're very close in popularity, but also we can come over to this tool. This is the ETF overlap tool, which shows you how similar or dissimilar different ETFs are. And with SCHD and VYM, they have 29% overlap, which is actually quite a bit. If we begin to look at some other names like Noble, for example, this one is a lot less. Only 16% overlap. We can do some other ones like VIG was on that list. If we find the overlap here, only 18%. Another one is DGRO. Look at the overlap here, and it's only 27%. So VYM definitely has the most overlap, and in terms of popularity, it's very close to SCHD, making it a great comparison. If we look at the total returns of SCHD and VYM, we can see why SCHD is the best in class. It has outperformed VYM in the past year by over 10%. And if we zoom out to 5 years, SCHD has been consistently outperforming other dividend ETFs and by an increasing margin as of late. So what's the special sauce? Let's begin with their basic information. So this is VYM. So they seek to track the performance of FTSE High Dividend Yield Index, which measures the investment return of common stocks of companies characterized by high dividend yields. SCHD, on the other hand, the goal of this is to track the total return of the Dow Jones US Dividend 100 Index. So what we got from that is they both passively follow an index, but they follow a different index. So VYM is the FTSE High Dividend Yield Index, and SCHD is the Dow Jones US Dividend 100 Index. So the next question is, what is the difference between these indexes? So here's some more information on VYM, and they have this section about the benchmark. So the FTSE High Dividend Yield Index is derived from the US component of the FTSE Global Equity Index series. Includes stocks with the highest dividend yields, and it excludes REITs because of tax reasons. All right, so that gave us a bit more information, but not as much as I want. So I continue to do some more digging. So I found this blurb on the principal investment strategies. So this first sentence is what we already read, but then they expand a little bit more. So it's the FTSE High Dividend Yield Index, which consists of common stocks of companies that pay dividends that generally are higher than average. The fund attempts to replicate the target index by investing all or subsequently all of its assets in the stocks that make up the index, holding each stock in approximately the same proportion as is weighted in the index. Now, lastly, I came across this, which is the eligibility of securities for this ETF. So as mentioned before, this is excluding REITs. It also excludes mortgage-backed securities. It excludes companies that have not paid a dividend in a 12-month period or have a current dividend yield of 0. Okay, so the takeaway here is this is a very basic index. It focuses on companies with a higher than average dividend yield, and that's pretty much it. Pivoting to SCHD now, let's learn more about their index. And this is what I found on the Dow Jones US Dividend 100 Index. So the index universe is defined as the constituents of the Dow Jones US Broad Market Index, excluding REITs. So this one also excludes Real Estate Investment Trust, just like VYM. But here it gets a little bit different. So the stocks must pass the following screens: minimum 10 consecutive years of dividend payments, minimum float adjusted market capitalization of 500 million, and a minimum 3-month ADVT of $2 million. Okay, so that's how securities are screened, but then down here is more on the construction from that point on. So the eligible securities are ranked by each of the 4 fundamental based characteristics. The first one, free cash flow to total debt. Annual net cash flow from operating activities divided by total debt. Companies with 0 total debt are ranked first. Return on equity, annual net income divided by total shareholders' equity. Indicated annual dividend yield, so that's just the yield of the company. And lastly, 5-year dividend growth rate defined as this equation. And in a nutshell, that's how this index that SCHD follows operates. We can see that it has more filters and construction behind it than VYM does. VYM is more basic in comparison. And if we come and take a look at the actual holdings now, this is VYM and it's filtered by the heaviest percentage up top. So we have names JP Morgan, Johnson & Johnson, Home Depot, P&G. We got some oil, Comcast, Verizon, Pfizer, a lot of these large blue cap, high dividend names, which is to be expected after reading that description of the index, which is just a focus on high dividend companies. So Broadcom has a dividend yield of 3%, Pfizer is 4%, Verizon is like 4.5%. So that's why these companies have made the list. If we take a look at SCHD, they have Pepsi, Home Depot, Pfizer, a lot of overlap, but it's clearly pretty different. We got Broadcom close to the top, Coca-Cola, Amgen, Texas Instruments, names like BlackRock. We got Lockheed Martin, T. Rowe Price, so on and so on. So definitely some overlap, but some differences. And if we come back to this page, we can see that overlap is 29%. But all of that difference is accounted for because of the underlying index. So this Dow Jones US Dividend 100 Index that SCHD follows has all of these requirements, mostly of 10 years of consecutive dividend payments, the 5-year average growth rate. It takes all this into consideration, while VYM only takes into consideration high dividend yield companies. So the free cash flow to total debt, the return on equity, the 10 years of consecutive dividend payments, and the 5-year dividend growth rate is all what accounts for this difference in performance. So to me, that clearly makes SCHD a better investment because all this stuff, like the average growth rate of the dividend, the history, the free cash flow to debt, all of that is very important stuff, and that's definitely being manifested in the price performance. In fact, having a focus on the dividend track record and the growth rate in that dividend are positively reflected in the dividend stats of these ETFs. So SCHD has immense dividend growth, 17% in the past year, and VYM in that same time only had dividend growth of 2.26%. And I think now we understand why. It's because of the underlying index and VYM not even focusing on that while SCHD does, and it makes a difference, and that difference is reflected in the performance and the stats of this amazing dividend ETF. So hopefully now we have a better appreciation for why SCHD is the best in its class, and it's all because of its underlying index and its focus on more data than just dividend yield. It's more dynamic. But that's the end of the video. I hope you guys enjoyed. If you're still watching, give the video a like, subscribe to the channel, and I will see you in the next one.